Welcome to Sunday Night Futures Live. We are going to be talking about tonight, first, a little bit of housekeeping about the website. Secondly, we're going to be talking about the Fed's balance sheet. It grew they posted it last week. We did not go live on Thursday. I did not go over it. We're going to go over it tonight. We're going to talk about economic data. We're going to talk about OPEC. OPEC undercutting a United States president again. The role of the United States as being a leader in the globe is dramatically being scaled back. And we're going to be talking about the quarterly charts, several quarterly charts that'll give us a clue of how we're poised to open up Q2 2023 and what areas, where are the most bullish charts that we have in our list of sectors where we want to be. So stick around, a lot to go over. So first, before we go over the opening price action of the futures, the website had a problem, had to do with Cloudflare, which is a firewall, and it kept the site down. It took a while for them to figure it out, finally figured it out. But they restored the website as of the 22nd of March. So whoever signed up from the 22nd forward, I don't have you anymore. I don't know if I can find your data, so I apologize. It certainly hasn't been released to anyone. It's just it was re-imaged. It doesn't exist anymore on the website, so it was not lost at all. Except it doesn't exist. It's in the ether. So if you had signed up, you're not getting emails, you're not getting commentaries, reach out to me. We'll work it out and we will get you reestablished. And again, there was no security breach whatsoever. So let's get to it. Let's say hello to people. Quiet night so far. What is there, a game? Jody, hello. Very early, Jody. I'm very impressed. Okay, so let's get to it. This is a headline that came out today. It's no longer a unipolar world, meaning the United States being the sole leader around the globe. OPEC Plus makes surprise 1 million barrel oil cut production. Huge, huge. And now you're seeing why the United States is beginning to open up the Alaskan oil fields to production. So let's take a look at the futures action. And oil is rocking, up 7%. The BRIC nations just smacked the United States right across the mouth. We were worried about inflation before the new quarter. Wait till this quarter ends, because this is bad. We're opening up at $81 the barrel, and I'm going to be going over a quarterly chart and a monthly chart of oil. And I went over this with members yesterday on the weekend commentary, where I mentioned oil looks like it's setting up for a rally. We got it. A lot more people just popped on. So hello. Tim, hello. Mr. Pete, good evening to you. Joel, hey, Joel. SLG and UNG. Yeah, we're going to go over UNG in a moment. Actually, nat gas continuous contract. But let me make a list. I know that silver is on the list. AGQ, which we own. I'm watching oil here. Thank God I didn't short the Explorers. SLG. You got it, Joel. Blue Zayton, hello to you, sir. Talon, welcome, brother. Falcon, how will the fact that China and Russia are signing deals to no longer use the petrodollar Yesterday, starting. It's bad. It's very, very bad. I mean, you take a look at not just China and Russia. France took delivery of liquefied natural gas in Wuhan the other day. That's huge. They're supposed to be an ally. That's huge. Well, Pete, we're going to go over. UNG. It's the same thing as Boyle chart wise, just different volatility. Okay, it's not good. Long story short, it's very, very inflationary. If they decide that they do not want to hold dollars and they're going to do a business in yuan or whatever the BRICS plan on rolling out as some sort of a commodity-based currency, that's going to take a long, long time to roll out. So I don't think that's an immediate threat, the BRIC currency. But the more immediate threat is the fact that the petrodollar is done. It's done. So we're going to see how the dollar is responding in a moment. But at current, I'm keeping my eye on light sweet crude here, and it's bidding and it's holding gains. Let's go to the weekly chart to appreciate where we've been and where we're probably going. Weekly chart. So at the open, they just spiked us above the 21 period and the 20 period. This is the 21 period exponential moving average in orange, the 20 period simple moving average in blue. We have the 50 period EMA immediately above. We're probably going to tap this, if not tonight, by tomorrow. We'll see whether or not we break out above it. SBEV, long or short on that swing trade? I got you on the list. I believe India too. And that would be shocking. I mean, they're enemies. China and the Indians are enemies, and for them to do that, it speaks volumes about who the Indians are more threatened by, the Chinese or the United States. Long. Okay. So Stormy Daniels got a stimulus check. What's exactly right. We're going to talk about that in a moment. Pete, China. Okay, I'm not sure what that's referencing, Pete. If you want to clarify that, I mean, does that go to my question of who are they more afraid of? If they're taking yuan as currency, that they're really empowering their enemy. Big RSI divergence on QQQ daily. We'll take a look. Love a good divergence. Don't be sus. Like and subscribe, Yoga Mac. Yeah, please, if you could like and subscribe, I really appreciate that. Thanks, Yoga Mac. Okay. All right, so yeah, Pete, we're talking about that. Gotcha. Okay. Let's get to it. Let's go over the futures action. We went over oil. Oil is bidding and bidding very, very strong. Let's take a look. 15-minute view again. We are holding gains slightly off the highs of the session. RSI at current is at 93.30. We're going to get a pullback fairly soon here, but it's probably going to be an orderly pullback setting up for a higher high. It's not that I have a chart in the back of my mind which makes me uber bullish on oil right now. We're going to talk about that in a moment. Now, let's go over to the equities arena where we usually begin. I wanted to get oil out of the way. I know everybody's going to be curious about that. So that mystery's been solved. The question is, how are equities going to take this? S&P futures gapping down by a little over 1/4 of a percentage point. Again, this is a 15-minute chart. We are extended. Note the stochastics. We're very extended here. You saw a lot of window dressing at the back half of the week last week. The fund managers did not want to send out their statements showing that they were not long of Tesla. Tesla's up 68% on the quarter. NVIDIA up 93%, I believe. So no joke. They had to load up on those stocks and pound their chest about why they're the best in the world, even though they didn't own them as much as they say they did or pretend that they did. So E-mini's gapping down. We'll see whether or not they stay down. They may rally and fill the gap. I can't wait to take a look at gold. Oh, NASDAQ gapping down, spot 42%. We're just about at session lows right now. We're probably going to head down to that 20-period moving average in blue. Let's check out the Dow futures. Well, we got the Russell here. Let's go over the Russell. Russell gapping down, not horribly. Spot 1.3%. Clearly, the Qs are taking it on the chin harder. Why? It's because they're more extended. You saw a lot of money rotate into the Qs. They're very extended. NVIDIA extremely extended. So no great shock if we get a pause here at the beginning of the quarter. Dow futures. Where are my Dow futures? Not that they really matter that much. I always forget the Dow symbols. You know what? I'm not going to waste time here. We know the S&P. We know the Qs. That's good enough. Let's take a look at the U.S. dollar. VIX spiking here. U.S. dollar. Dollar gapping up. I'm very, very surprised. I'm very, very surprised. The dollar had a very good day on Friday. We were in an ascending wedge formation, and now we are breaking out above it. I'm very surprised that we're gapping up like this. Let's take a look at how the Japanese yen is doing. It is gapping down. Euro futures moving lower as well. So the dollar clearly the winner here. So the question is, why? So I think what we need to do is we need to take a look at the 10-year yield. This is why. The yield is gapping up higher. Why? I believe it's because put your Fed cap on for a second. You're boxed in between the banks rolling over, going belly up. You have to bail them out or bail out depositors. You have oil now spiking up higher. And you may be saying, well, they back out food and energy out of their inflation concerns. I don't believe that. But I think that with this spike up in oil and the longer term chart, monthly time frame looking very, very strong, I think that there's an expectation that inflation is going to rise. They're going to need to raise interest rates. Therefore, that it is going to mean weakness for at least the technology stocks, perhaps even the bank stocks. They should be doing well, the banks, in a rising interest rate environment. They can't because they loaned out long at low yields in return, and now the depositors want their money back, and they don't have it. So this is a problem. This is a very, very big problem. The Fed is not having a good night tonight, right now. This is a big move up higher. Let's take a look at it on a weekly time frame, if it's updating right now. And it is. They're trying to break out yields here. We'll see whether or not that happens. No breakout yet. We are at resistance. Back to a 15-minute view. Let's take a look at commodities. How are they responding? Gold, taking it on the chin here a little bit, down over a third of a percentage point. Now, if yields were not spiking up higher and the dollar was not spiking up higher, I would completely expect that you would see a huge gap up on gold. Now, if the Federal Reserve naysays this spike up higher on oil prices, and they continue to feed into the market that they are going to be data dependent, the bond market's already pricing in multiple rate cuts by the end of this year. If for any reason why they should take away those rate cuts, well, then you're going to see gold spike up higher. The dollar is going to probably stay bid for a while. And in reality, you know what? If they take away those rate cuts, forecasted rate cuts, you may see a pause on the rally in gold. However, if inflation continues up higher and they don't change the expectation of interest rate cuts, meaning they stay the same, you're going to see gold rip through the ceiling. And we're going to go to a quarterly chart of gold in a minute, so stick around. Por favor. Let's take a look at silver. Silver, big gap down here. Down over a third of a percentage point. Probably going lower. As long as the dollar stays bid and yields continue to move up higher, precious metals are going to be weak. But this is an opportunity, folks. Gasoline futures, look at this. Look at the gasoline futures spiking up 4% in one day. Think about it. You're a Federal Reserve chairman. You're not watching this. Please. Let's continue on here. I want to play around with energy for a moment. Let's take a look at home heating oil. I mean, the Davos crowd, the globalists, they are loving this. They are loving this. It's reducing our standard of living. That's copper. Where's home heating oil? I got to write down these symbols. I don't want to bore people to death here. It's not that important. All right, let's continue on with commodities. We'll stick with energy for a moment. Let's go over nat gas. Natural gas gapping down. So for those folks looking at natural gas, we are not looking at a strong session here, down 6.5%. All right. Interesting night. Really, really interesting night. Let's continue on. Let's take a look at agriculture. We'll go to a weekly chart for these to get a feel. Corn bidding up higher. Not sure if this is a bull flag setup or not, or bear flag setup or not, but it's looking fairly bullish. We may break out. Soybean prices, big reversal week last week on soybeans. They had broken down 2 weeks ago. Now they're back above support. Very impressive price action on soybeans. Wheat, also some pretty good price action here. We've stopped going down. We are continuing to trade within a very, very tight trading range. They tried to break it out last week. There was a rejection of that breakout. Let's take a look at protein prices. Oh, here's home heating oil. Home heating oil. Oof. That's up 4%. Cattle. Let's go back to the weekly view. Wow. Wow. What a move. What a move. So a big breakout here for cattle prices. I think we've got a good feel for the markets going into the new week. The volatility index, right above my head here, is spiking up higher. It had a disastrous week last week. The dollar continues to bid. NASDAQ futures in the center box lower. This is a 1-minute chart. We want to get off of a 1-minute chart. Let's go to a 15-minute chart. Let's see whether or not they take out the lows of the session. We'll set up an alert here. Back to oil. Yeah, so they pulled it off the highs. And what they're going to do is they're probably going to try to break this out yet again. Okay. All right, let's get to it. Let's go to some comments here. Trader Isaac. Hello, Bob. Hello, Trader Isaac. Hopefully oil will be good for tankers. It should be. STNG, INS, good for you. Good luck with those trades, pal. The RSI divergence on Qs is from February. Is that too long of a time frame? No. On a daily chart? No, that's fine. Saul, you shilling. I don't know what this is. Okay. Yeah, Jeff, I think that's a good way of putting it. Sticky inflation. Yeah, I agree with that. TZ Burton. What a crazy week. Yeah, this is going to be a huge a beginning of Q2. I mean, wow, a lot going on tonight. And the bidding oil back up again. VIX stable. NASDAQ futures stable. Dollar pulling back slightly off of its highs, but still a pretty powerful breakout higher on oil. Breakdown on nat gas, a breakout on the dollar, a breakout on yields. I want to check back in with futures before I log off here tonight. So let's get to it. We have a couple of things we want to go over on the agenda. Fed's balance sheet last week, it climbed. Let's go to a yearly view. After bailing out the banks, they did a little bit of selling of treasuries last week, yet equities still, they did well. So the markets are pricing in Fed rate cuts, despite the fact that the Fed is denying it. The Fed always delivers on what the market expects. Okay, as for economic data, we have a bunch of Fed heads coming out this week, and who knows what they're going to say. So that's always a fly in the ointment. So beware. Monday, ISM manufacturing comes out. Tuesday, factory orders. We're going to get job openings as well for February. Oh, this is jobs week. We're going to get ADP employment data coming out on Wednesday. Now, I believe that this Friday is Good Friday and the markets are closed. Can somebody fact check me on that, please? So we have ADP employment coming out. We're also going to get ISM services. That's Institute for Supply Management Services. A read above 50 is a sign of expansion. A read below 50 is a sign of contraction. They're expecting 54.4. Tim, what my interpretation of that is that I think that nat gas is obviously in a bear market. Why is it in a bear market? It's because inflation rose, Fed raised rates, right? The economy slowed, therefore the need for nat gas got cut. Now, what are we seeing tonight? Yields moving up higher yet again. Oil, when I say oil, put an equal sign inflation. Oil equals inflation. So if oil's going up in price, so should the price of a lot of other things. Because remember, oil is just not for home heating or for gasoline. It's an input. If you're a manufacturer of tires, your biggest input cost is oil, because oil goes into rubber, to making of rubber. If you're in contracting your asphalt pavement for driveways, what goes into asphalt? Well, you got it, oil. So while the Federal Reserve may want to back it out, food and energy, they want to back it out of their calculation for inflation. That doesn't mean it doesn't impact the rest of the economy in terms of being inflationary. And that is calculated with the Fed. So I think that nat gas is getting pulled down in anticipation of a weaker economy driven by higher rates and a weaker economy. So that's my take. So, excuse me, a weaker economy, higher yields, higher inflation. That's what I meant to say. Tim, yes, on good. Thanks, Tim. Thank you. So, yeah, folks. So the markets are going to be closed this coming Friday for Good Friday, and a big report is coming out on Friday. I call it the Pimp Mac Daddy of all economic reports. That is the non-farm payrolls. That's coming out on Friday. So we're not going to get a reaction to that report until Monday of next week. You'll see the reaction probably in the futures market. I believe the futures market will be open. I could be wrong on that. You may want to fact check me, but I don't like the fact that they're going to be giving this report out on Friday and you can't react to it. That's a bit concerning. So I'll probably go home flat on Thursday night to avoid any sell off in the market or spike up higher. I want to be very, very neutral. April historically, nat gas best month, should be interesting. That's a good point. Maybe this is a good buying opportunity. If you see an extremely oversold condition on an intraday basis, maybe you want to step into the breach. I mean, it's down over 4%. You're welcome, Tim. Okay. What else do we have? All right. So, it's no great shock that they indicted the former president. And, you got to take politics out of this. And a lot of people get upset if I talk politics. It's really not politics. It's not politics. It's the American dream is built upon equal rights under the law. If you are either a millionaire or a impoverished individual, the presumption is that you're going to get equal rights under the law. That is kind of gone now. And if this is true, if we do get a rogue judge that comes out and says, we're going to impose a gag order on Monday, and that'll ban him about talking about Tuesday's arrest in New York City with a penalty of 30 days in jail or a $1,000 fine. That's huge. That's huge. That's really, I would almost say it's a constitutional crisis, to be honest with you. You're going to gag a former president on really a misdemeanor where the statute of limitations expired 2 years ago, where the federal government didn't want any part of it. The guy bragged, the AG out of Manhattan, he didn't want anything to do with it 2 years ago. Now, all of a sudden, he's upped it to a felony charge, and you have a rogue judge that's going to slap a gag order on the former president. I mean, what's going on here? So, and I'm going to answer the question with an article that I found pretty good. And there's just some highlights I want to talk about here. Indicting Trump is the end of U.S. politics. And a couple of highlights. Davos. If you want to know what's driving all the insanity that we're seeing here in the United States, it's the corruption of the politicians by the Chinese government. And it's also the Davos crowd, their hatred for humanity and their desire to have that caste system that they had in the Middle Ages prior to the United States even being thought of. They want that back. And they don't want a United States. That's the problem. The United States is a major problem, even as it stands right now in our current condition. Davos, through Democrats, have been running a culture war for decades to stamp out the past. Does that sound correct? Yeah. It is quite Leninist. Turley, this is Jonathan Turley, attorney, scholar, and others have focused on it's just not done to indict the president, especially something as irrelevant as paying hush money to Stormy Daniels. This is just politics of envy taken to its ultimate conclusion. Racism, sexism, I'm not going to read all of this. They are all about tearing down the old institutional order. It's about going on, it's been going on for generations, invading male spaces like the Augusta National, forcing female reporters into locker rooms, endlessly arguing the wage gap between men and women. This is what Obama said. This is why you didn't build that, you basket of deplorables, that's Hillary. Anything you have earned can and should be taken from you for wrong thing. And that is at the heart of Trump's indictment. Trump is a distillation of everything they need to tear down to validate their envy. He's a white male, politically connected, a little corrupt, very cheesy, and an antithesis of what the middle class, bi-coastal mid-twits believe they should be: successful. They hate Trump not because he's successful, but because our society allowed him to become successful. Davos is at war with humanity. Does that make sense? I think so. Davos is at war with humanity through undermining the institutions of civilization itself. They will not be stopped in their quest to secure global control over humanity. They have stoked an animus against Trump in the minds of people like Nancy Pelosi that can only end in fire and violence. They know that 2024 election is where their dreams come together. They need another Davosian Quisling in the White House to counter what's happening with the Federal Reserve hawkish policy. Davos has control over the political and monetary policies of Europe. True. It's lost political control over the UK and got it back, Brexit, and they will reverse Brexit. That's brought the Bank of England back in line. However, it is very clear at this point that they do not control the Fed. Why? They were raising rates and rolling debt off their balance sheet. That would only strengthen overall the United States. Yes, banks will go down, but that's called capitalism. Not bailing out the banks. That's not capitalism. Letting the weak fail, letting the zombie companies fail, and then allowing for all of the assets to be grabbed up by other stronger companies and allowing for the money that was going into these zombie companies to find new homes in new startups and starting new industry. That's the capitalistic way. What they don't want that. They want the currently powerful to become more powerful, the monopoly companies, and They don't want small entrepreneurial companies. They hate them. And they want that ability to have upward mobility destroyed. So they have power and control. They have political control until January 2025 in the US, but do not have monetary control over the Fed until 2026 when Powell's second term is done. This is the window for US patriots to win the Civil War before it even begins in earnest. Powell's tight monetary policy will be the Democrats' main talking point for 2024. They're going to pin the weakness of the economy on Powell, but I think it's going to fail. I mean, I think 90% of the population doesn't even know what the Federal Reserve is. 50% don't even understand that it's not even a federal government agency. It's privately owned. It's a quasi-governmental agency. The GOP and the Fed are the reason you are broke. They cost you your job, your dream home. This is what they want you to believe. And technically, they're right. We need more free money to help the poor. This is what they want. They need that beholden class. They need to have that underclass that is always waiting for the next check. And God forbid they have upward mobility. That's where they lose their political power. I have to hand it out to these guys. They've turned the libertarians into the biggest water carriers by turning the Fed into a strategic asset on their battlefield. With neither monetary nor political control over the U.S., there can be no 21st century vision of VE Day. It's bad enough that the global South has rebelled. Davos knows this is it for them. In 2024, in the U.S. or bust. George Soros said as much in Munich this year. This is why Trump needs to be indicted, even though the case is legally illiterate. In short, what they want is they don't want Trump to be able to run. It's fine if a Republican wins as long as it's a rhino. But this is what it's all about. Control, power, and the bringing down of whatever the American dream was and your ability to get it, they want that taken away. And whatever you get is from the government, and your faith and your religion will be to the government. And rather than admitting they're wrong, whether it be from COVID policy to bailing out the banks, and whatever happened to Sam Bankman-Fried, how is he out? He supposedly went bankrupt. He's out on $250 million bail. Where did that money come from? Supposedly, some of it was put up by a couple of charitable groups. Another was his parents put their home up on, they took a loan out against it. Who put up the rest of the money? Where is this guy? He defrauded over 1 million people, and you hear nothing about him. Bernie Madoff, when he was arrested, you heard nothing until he was put into prison other than Bernie Madoff. You hear nothing about this guy, FTX. Where is he? And the fact that you don't hear about him, yet you're hearing about Trump for hush money that was paid out years ago, tells you all you really need to know about the climate that we live in. And all they're going to do, folks, if you think they're going to back down every time, now that we see them, they know that we see them, they're not going to back down. They're too close to their goal. And they know what's going to happen if they lose, if Trump gets into office. Here's a guy that lives for the payback, and he's got a massive chip on his shoulder, and he is going to come in guns a-blazing, and they know they will be doomed. So from here until Election Day 2024, it's going to be dystopian. It's going to be dystopian. Aren't the Davos people like 90 years old? A lot of them are. Yeah, they are. How much money do they have left? They have plenty of money. It's not, Jody, you bring up a good point. What a lot of people don't understand is that you have this guy, Klaus Schwab. He looks like a Bond villain. He's like in his 90s as well, along with George Soros. They are not the puppeteers. The puppeteers are the bankers. I just drew a blank. Somebody's going to remind me in 2 seconds. The big banking family over in Europe. The Rockefellers, the Harrimans. These are the people that really run the globe. And it's only a few families, old money, family money, and they're far more wealthy than George Soros. These are the guys that are pulling the strings, and you never hear about them. You never will hear about them because they don't want to be heard about. The Rothschilds. I was going to kill me if I didn't remember that. Okay, let's talk about quarterly charts here, folks. Now, we've been talking about the steepening yield curve or the inverted yield curve, and now the steepening of the yield curve for quite a while. Well, the Bilderbergs, that's a group. And yes, the Bilderbergs, they're a big group, but they're not that Rothschildish family. They're not the puppeteers. I'm sure they're cozy with the puppeteers, but they're still not the puppeteers. They're the upper echelon, but not the top tier. So the yield curve didn't break out last quarter, but we certainly put in one heck of a bottoming tail. I think that we are done going down on the yield curve. And when you take a look at how we close out the month, the yield curve broke out. We are steepening now. We are no longer continuing to invert on the yield curve. We are now moving up. And here is the overlay of the S&P 500 versus the yield curve. And when it steepens, the S&P 500 in gray, silver, when it steepens, the S&P 500, not right away, but ultimately does roll over. So by no stretch of the imagination am I saying that the S&P 500 is going to roll over this month, maybe not even this quarter. But as we begin to steepen even further, especially up into this gray range here, this is where, on average, the markets begin to buckle. Look out below. S&P 500 quarterly chart. Now, I think that we're going up higher here. Now, what we're looking at is a breakdown. We broke down in the second quarter of 2022, continuation breakdown in the third quarter. Ever since then, we have been trading sideways with a bias to the upside. I think they're going to retest around 4,500 on the S&P 500 unless something hits the fan. Then we're going to see whether or not we have the power to either break out and take out new highs, or do we put in a double top and break down to new lower lows. The steepening of the yield curve would imply that while we do have time to move up higher, ultimately, if we get a steepening of the yield curve to a certain range, we are going to roll over on the S&P 500. So going into the new quarter, my attitude hasn't changed. Short-term bullish, longer-term bearish. US dollar, quarterly chart. We broke down last quarter on the US dollar. Why is that significant? Well, it matters because gold had a massive, massive breakout. Why does the dollar matter to gold? If you get a weak US dollar, gold rallies because gold is denominated in US dollars. And gold at current is breaking out. And it looks as though it wants to go higher, despite the fact that it is pulling back this evening. I think that if you get a pullback and a retest of 1950 on the price of gold, it's probably going to be your last time to get in on gold before it breaks out above 2,000. So a very strong chart on a quarterly time frame. This is going higher. Monthly chart. A major, major outside reversal bar on the month. Again, gold is going up higher. Now, you think about all the shenanigans, all the chicanery that's going on with the Davos group, Chinese money influencing our politics. You have agreements being signed by the BRIC nations doing business in yuan versus the US dollar. You have the petrodollar no longer in existence. You can buy oil in yuan now. France, supposedly our friend, wink and a nod, they are now accepting yuan as payment for liquefied natural gas, or they're paying in one. I don't know how the transaction went. I don't think I think they import it. So they probably paid it in yuan. So think about it. Rather than having to pay for that delivery in US dollars. So normally what they would do is they would go to, I don't know, the World Bank, whatever bank they need to go to, and buy dollars, or maybe out of the Forex markets, buy dollars. They had to go out and they had to buy yuan. They didn't buy dollars. So the demand for dollars is dropping and the yuan is gaining. Bitcoin. This is a quarterly chart, but we already have a breakout on the quarter. This is Q2 of 2023 in red. We're off the highs of the session, but we have a breakout on Bitcoin quarterly time frame. So when you think about this, you're seeing gold breakout, you're seeing Bitcoin breakout. Why? There's a crisis of confidence in the United States, and it's not going away. It's getting worse. Oil. This is a chart I was referring to earlier, that oil on a quarterly time frame was down. It was not a great quarter. It was a weak quarter. But what we want to take a look at here is the bottoming tail. We tested the 20-period moving average, the 50-period moving average. We rallied off of both. And then when you take a look at a monthly chart, look at this price action. Look at these bottoming tails here. This $75 a barrel mark is like a granite floor below the price of oil. And what are we doing at current? In the new quarter, oil is up over 7.25%. A clear breakout. The last price was $81.17. A clear breakout above this upper band of resistance. So far on this quarter, we have a quarterly breakout on the Bitcoin. We have a quarterly breakout on oil. We will have a quarterly breakout ultimately on gold. Right now, it's pulling back until the dollar's done with its rally, then it'll roll over. Got to fill my car up with gas. Yeah, you're right. You're right. Bob, why is not goes? Did we cover that conversation, or did I already cover? I think I answered that question, right? Oh, here's my mouse going wonky again. Okay, yeah, we went over this comment. Okay, good. We're caught up. All right, let's do some historical charting here. So S&P 500 quarterly chart. We broke out last quarter. The folks who are using TrendSpider, 35% discount code below. You get the seasonality along with your subscription. The month of April is generally up 77% of the time, going back 30 years. So a significant amount of data here. These next couple of months are pretty much the strongest back-to-back months out of the year. So the bias should be to the upside. Now, we did come a long way last week, especially on Friday. So I'm not going to be the least bit surprised to see a pullback like we're seeing at current. In terms of weekly price action this coming week, we are generally up 68% of the time. So again, seasonally strong period. Now, somebody mentioned earlier that nat gas has a strong month historically for April. Let's check that out. This goes back 16 years, so good data. Yeah, you're definitely right. 73% of the time, this is the best month out of the year for natural gas. So we need to really look at the intraday charts of natural gas. Once it gets oversold, is it time to possibly step into the breach, meaning Buy when there's blood in the streets in anticipation of a counter trend rally on nat gas. So let's take a look at nat gas. It's on our list to watch anyway. This is a quarterly chart. Let's take a look at how we closed out the month. I haven't looked at, oh, this is a bloodbath of a month. I was stopped out of natural gas. I didn't look back. Yeah, we really pulled back here hard. We took out the lows of February. So not a good close on the month. Now, you could argue that what we're setting up for is a breakout. I think if we tap $5.50 on UNG, I think we can look at UNG as a possible trade. Let's take a look at nat gas at current in the futures market. Are we seeing a bounce back? We are not. This is a weekly chart. I want to toy around with this for a minute. I think we may have a trade here on natural gas. Here's the weekly support down below. And that coincides with 1.939 on the spot price of natural gas, the UNG. So we get down to that level, it would be an interesting point at which to step into the breach and take a long trade on. So natural gas, interesting. Daily view. Not for nothing. Natural gas broke out on Friday. I'm warming up to natural gas, pardon the pun. I think they're going to do a retest of this breakout. So we broke out. I think they're going to pull it back, retest this breakout point. I think you may have a long trade on here. Maybe an ugly morning for natural gas, but I think you have a good opportunity to catch a tiger by the tail and see whether or not you can get a rally off of the lows of the session. Seasonality is very, very favorable. Again, the strongest month out of the year at 73% uptime over 13 years. Stochastics hooked up. I like the setup here. I'm liking natural gas. So I went into this pessimistic. I'm leaving optimistic. Silver. We are long of silver. Silver at current and the futures market is getting beaten up. But on the month last month, a bullish key reversal. If you're not familiar with the terminology I'm using on these candlestick patterns, link below, 5-part video tutorial on my top 5 favorite candlestick patterns, free of charge. Looks like we're going up higher. Next price, 36.09 on silver. Weekly chart looking handsome. Daily view. Looking good. We're going to get a pullback. We're pulling back in the pre-market. We're extended on stochastic. It's okay. It's the pause that refreshes. I'd be a buyer of silver here. SLG. SLG. Weekly view. So this chart improved some. It had broken down. It had broken down the week before last. And I remember being pessimistic about this, but now I'm optimistic because there was a negation of this breakdown. We broke down through support. Then last week we reversed to recapture it. I like the setup here. Daily view, good price action. Monthly view. The monthly view is a bit not good, but the shorter duration, shorter time frames are looking pretty bullish. So I think you have more upside potential here on SLG. I would watch for the rally. Then I would treat this as a swing trade only and look for a pullback. And if you're looking for this as an investment, look for a pullback, a higher low or a retest of the prior lows. And if it holds, then you want to buy it and then add on strength as an investment. Right now, it's a short-term swing trade to the upside. SBE. The question on SBE, is this a candidate? What the heck just happened here? Is this a candidate for could somebody confirm that chart? SBV? Is that right? I may have written it down wrong because it's not coming up. Blue Zayton had asked for it. I typed it in wrong. There we go. Much better. Okay, my bad. Okay. Wow. Right off the bat, I like this chart. So here's the power of the automated trend lines. I've never looked at this chart in my life. All right, so here's the power of the AI. Click of a button. And what this tells me is that we broke out here in November, retest, breakout, continuation, breakout. This is going up higher. This is a beautiful, beautiful long-term consolidation. And the phrase I always use is that the longer the consolidation, the greater the greater the validation of any breakout. Now, this is a quarterly chart. We eked out a close just above resistance. Weekly chart, it looks as though it's going up higher. It's holding the 21 period exponential moving average. Daily chart, a little bit of topping action here. So what that's implying, when I say topping action, you got a topping tail. You have resistance above, sellers above. So what I would do, I'd like to see another retest of 1.5. Let's call 1.56. Let's take a look at the intraday chart. Let's go with the 30-minute chart. Nice pullback here. Again, I did not draw these support and resistance levels, folks. This is the AI. 35% discount code below, TrendSpider. They have a 7-day free trial offer. I give it away free to our new members with silver and gold level memberships. So we have retraced. We are holding support. I like this setup. I got to tell you, I don't like that daily topping tail, but I like the intraday setup here. So I would watch this. I don't think you need to jump in on this one on Monday morning, but I'd watch how we close on Monday. If we close strong at the highs of the day, then I would dip my toe into the water and begin nibbling here. I like it. QQQ. Well, QQQ, yeah, we can go over it. So the trip Qs benefited from window dressing at the back half of the quarter. And we broke out on the quarter, monthly view. We broke out on a monthly time frame. Oh, sorry, this is not a monthly. This is the monthly time frame. We broke out on a monthly time frame. Beautiful price action here. I have to say it. Weekly chart, beautiful weekly price action. I think we're going up higher. Now, what could derail this are inflation concerns. The price of oil ripping up higher, along with gasoline, home heating oil, is a problem. That because the reason why it's a problem is it's inflation, and the Federal Reserve has to fight inflation. This is his mandate. So that means higher interest rates, and yields are spiking in response. So we're probably going to get some weakness tomorrow on the trip Qs. STNG, Scorpio tankers, monthly chart not that great. Weekly chart looking good. We did a retracement back down to the 21 period EMA. It held, it reversed off of it, bullish. Daily chart, bullish reversal bar off of support. I like it. STG looking good. Jody. Okay, Qs we did. Oxy. It's going up. I think that the energy stocks are going to be in fuego tomorrow. Occidental is going to go up. They were up last week, and they broke out. This is going up. There's nothing not to like about this chart. It's going up. You are welcome. ORGN. Not a great month, but it managed to rally back. 425 is the price to watch. You don't want to see a trade down below that mark. I would avoid on a trade down below 425. Weekly view. Where do we close here? 427. We're right there. Daily view. Again, we broke out above 427. We're above the 21 period EMA. It looks good. It looks good. I think it's going to go up higher. Bullish. We're going to leave it off with two last ones. Scott's Miracle Grow. I remember the last time we went over this chart, I was optimistic, but it did not follow through. In fact, it broke down on a monthly time frame. It was looking good. Weekly view, it did a little bit of bounce back last week. I mean, it's okay to the long side, but I would not be big to the long side here. Your momentum is waning on Scott's Miracle Grow. So every rally is being faded except for last week. Daily view. I think it's worth a long trade, but just keep an eye on your weekly stochastics. They are lowering, moving lower, whereas the daily charts are beginning to hook up, and that's a good thing. So I think you have more upside potential here, but just beware. You got to profit. Take the profit. Last one up, CF. This is a monthly chart, and we tap support, and we bounce. The question is, do we hold it? Weekly view. If I were to enter this trade, stop loss on a close down below 68.52. I'd be a buyer of the shares on a close above 73 bucks a share. Falcon, if they stop using the dollar, is there a financial tactic, let's say Trump, whoever, would use to smack their attempt to overtake the dollar? Yeah, I mean, the only real way they could do that is a couple of things. One, the way to strengthen the dollar is and to restore confidence in America is you need to cut spending. You need to cut the size of government because remember, the government blames the citizens for inflation. The government will blame the Federal Reserve, and they're partly right for inflation. But in reality, the reason why the Federal Reserve printed so much money is because of horrible legislation out of the federal government. They took away the Glass-Steagall Act from 1933 or 1939, one of the two, where you had a Chinese wall. You couldn't use depositor money to trade with. It just made sense. You couldn't use that money to gamble with. They got rid of that act under Clinton. And what did they do? They blew themselves up, not once, but multiple times. So the government is the driver of inflation. To kill inflation, the Federal Reserve needs to do its job. It needs to raise interest rates very, very aggressively and have the backing of the White House to allow companies to fail. And there are going to be a lot of companies that fail. Now, let's say the current CPI is accurate at around, what's CPI at now? Actually, wouldn't be CPI. It would be whatever the Fed's funds rate is right now. You have to take the Fed funds rate above the CPI. So here, this is what I was actually thinking, CPI. Here you go. So here's a CPI. Quarterly view. Ripping up higher. Current inflation rate. So they need to take the Fed funds rate and they need to take it above the rate of inflation. That will kill inflation. It'll bring it down. That's what Paul Volcker did. But you also need deregulation. You need to take all the red tape away from small businesses and allow them to grow. You need to allow manufacturing back to the United States. You need to make it attractive. I've always been a big advocate, and I never hear anybody talking about this. You have a massive pool of workers in the old Rust Belt from St. Louis all the way up to Buffalo, New York, a vast area, Michigan, Illinois, Indiana, all those areas that were once, they were the engine of the manufacturing miracle that was the United States of America. President Trump should come in and tell the globe, you bring a business into this tax-free zone, build your company, put people to work here, grow the economy, grow GDP. What does that do? The growth of the GDP deflates away, grows away the debt that we have, which is more easily payable. We can pay it back. But right now, we're at 120% of debt to GDP. In short, we are bankrupt. We are bankrupt, and we're never going to pay it back. The only way to get out of this debt trap is to grow out of it. And the federal government needs to get reined in. They've got to stop the spending. the uh, the private sector, the federal unions that they have, they got to go away. You got to get rid of them. The teachers unions, they got to be gutted. All these leftist organizations need to be eliminated, wiped off the face of the earth, and we need to restart. And I don't think I'm going to be alive, to be honest with you, to see it all happen, because there's so much work to do. The damage that's been done to this country has taken decades to do. And now they're really only in the past few years showing who they are and that they don't care what you think anymore. So call your congressman, call your senator, and tell them, we know about the digital currency and we will vote against you. We want you out if you support it. We do not want this digital handcuffs on us, because that's where we're going, folks. Have no doubt about it. So with that, everybody have a profitable trading week. Thanks for being here. Joel, can't believe this crude rally. Back to the no landing theme soon. Yeah, right. Exactly. Everybody have a profitable trading week. Thanks for being here. Like, subscribe. TrendSpider, 35% discount code below. I give it away free. 14-day free trial, members, silver and gold. And everybody have an awesome, awesome remainder of your Sunday. And thanks for being here. Be well.